Hello, I'm Jack Parker from Bevan Buckland LLP. I'm a chartered accountant and a chartered tax advisor, and today I'm going to talk you through the R&D tax regime within the UK. Research and Development, or R&D, is a series of tax reliefs which applies to limited companies looking to innovate in the fields of science and technology, looking to research or develop advances in their fields. As part of the Autumn Statement in November 2022, the Chancellor Jeremy Hunt announced a series of reforms to the R&D tax regime with effect from the 1st of April 2023, and these are the rules that we will be covering today. Within the UK, there are two types of R&D relief. There's the SME scheme, which applies to small and medium companies, and the large scheme, or the R&D scheme, which applies to large companies or small companies that are undertaking subsidised R&D. The best way to explain how the reliefs work is through a couple of illustrations. Taking a profitable SME company to start with, say you have a company that has profits for the year of £500,000, if they made no R&D claim at all, they would pay corporation tax at 25% on that profit, so they'd pay £125,000 in tax for the year. Assuming that they spent £150,000 on R&D qualifying expenditure within the year, they're entitled to enhanced R&D relief at 186%. They've already received 100% relief on the £150,000 as this has gone through their profit and loss account. The SME scheme therefore allows them to take an additional 86% of their R&D spend, so £129,000, as an additional deduction within their tax computation, which then brings their revised profit to £371,000. The corporation tax liability thereon is £92,750, and they've therefore saved £33,250 in tax, which equates to 21.5% of their R&D expenditure for the year. For a marginal company, so a company that's just about profitable, just about break even, for example, this business here that's made a profit of £100,000, due to the level of profit, they will have a blended tax rate, so part of their profits are taxed at 19% and part at 26.5%. The corporation tax liability on £100,000 of profit is therefore £22,750. Again, they'll get 186% tax relief, so they'll have an additional £129,000 as a deduction, taking their £100,000 profit to a £29,000 loss. They'll therefore have no corporation tax liability for the year, so they've immediately saved £22,750 in corporation tax. They also then have £29,000 of taxable losses to utilise, which can save them between £2,900 and £7,685 in tax, depending on how they choose to utilise this loss. Their total tax saving is therefore between 10% and 20.3% of their R&D expenditure for the year. A number of the businesses that make claims for R&D tax credits are pre-revenue businesses or startups, or loss-making. If you make a taxable loss, the R&D tax relief scheme allows you to surrender that loss back to HMRC in exchange for a repayable tax credit. The tax credit is set at 10% of the losses surrendered, so you have the choice to either potentially carry your losses forward to receive a higher rate of tax relief in the future, or sell them in now for 10% and just take the cash credit as is. For example, this business has made a loss for the year of £500,000. They will receive an additional deduction of £129,000, and this will increase their loss to £629,000. Of this loss, £279,000 is attributable to R&D activities, so this is the loss which can be surrendered, which gives a repayable tax credit of £27,900, or 18.6% of the R&D expenditure. And finally, we have the large company scheme, or the R&D scheme, which applies to large companies or to small companies that are undertaking subsidised R&D. The best way to demonstrate this is with a comparison of a company with and without an R&D claim. So here you have a company with a turnover of £1 million. They've incurred R&D expenditure of £150,000 and have other expenditure of £400,000, taking their taxable profit to £450,000. If they'd made no R&D claim, the computation stops there and they would have a corporation tax liability on their profit of £112,500. If they made an R&D claim, The RDEC credit is given at 20% of the qualifying R&D spend, so in this instance 20% of 150,000 being 30,000. That 30,000 is added on to the company's taxable profit and is subject to corporation tax. So the revised taxable profit is 480,000 and the revised corporation tax liability is 120,000. The company then receives this RDEC credit of 30,000, which comes directly off their corporation tax liability, reducing the liability down to £90,000. So the corporation tax saving is 22,500, which effectively is the 30,000 credit less a 25% corporation tax adjustment, and this is equal to 15% of the R&D expenditure for the year. The R&D tax regime has come under a lot of scrutiny. There's a lot of cowboy R&D firms who are submitting fraudulent and dubious claims, and that's receiving a lot of media publicity. This emphasises the importance of receiving professional advice from qualified individuals when preparing your R&D claims. If this is something you need assistance with, please feel free to contact us.